From the newsroom of Impact Alpha, I'm Monique Aiken, and this is your Impact Briefing for Friday, November 4th. Today I'm joined by Jon Hale, Director of Sustainability Research at Morningstar, to talk about what is at stake for impact investors in next week's U.S. election. Hello, Jon, and welcome to the podcast.
Hi, Monique. Thanks for having me.
But first, here's what you need to know from the week in impact investing. Keep it in the ground. That's been the rallying cry for climate activists who want to wind down fossil fuel investment and exploration. Now, a former Shell executive is launching a new kind of carbon credit to spur oil and gas producers to permanently shut down their wells. 06 will issue carbon credits for shutting down low-quality and inefficient wells, which contribute tiny amounts of oil and gas but account for 11% of annual emissions. Should fund managers be compensated based on their impact? Just 3% of impact funds link compensation to impact performance. In a guest post on Impact Alpha, Ani Patton Power charts the early adopters of so-called impact carry, which ties compensation to impact results. Without the incentives, she says, LPs, quote, risk seeing the impact be sidelined. November's list, that's LIIST, of impact funds currently raising capital includes a range of climate-focused investment funds. Propeller Ventures, for example, is building a contingent of ocean-focused climate tech entrepreneurs. Black Tech Capital in Toronto is investing in Black-led climate ventures working toward a just economic transition. 4 of the 7 funds on this month's list are led or co-led by women. Check them out at impactalpha.com. Collide Capital raised $66 million to back diverse founders. The New York-based venture fund will invest in early-stage businesses led by Black, Latino, and female founders who are closest to the problems they are trying to solve. And finally, Solugen brought in another $200 million for zero-carbon chemical production. The company's first facility in Texas started by making hydrogen peroxide and now produces a range of chemicals made from sugars, air, carbon dioxide, and enzymes instead of oil. Solugen will use the capital to build a bioforge in Minnesota. So today I'm joined by Jon Hale, the head of sustainability research at Morningstar. Jon, we are days away from Election Day here in the United States. What are you thinking about related to the consequences of this election? And what are you hearing from investors about what's at stake in this midterms?
Well, it's a good question, Monique. As we look at all the early voting trends and all the last minute appeals being made really by both parties, but I think that we're expecting a close election. That obviously the context for most of the year has been that it's expected to be generally a positive election for Republicans, and I think that makes folks in the sustainable and impact investing space a little bit nervous because there's been a fair amount of progress that's been made in the first 2 years of the Biden administration with Democratic Congresses, even though they're very closely divided between Democrat and Republican, and that would probably end if Republicans took control of either house of Congress. In fact, probably is not a good word to use there. I think it would end in terms of regulations that made impact and sustainable investing more easy to practice and in terms of climate legislation as well.
So a Republican Congress with one or both houses, what could they really do since Biden will still be in the White House as president? What's at stake?
Well, I think one of the things that they would be able to do, of course, is stop any legislative action in these areas. But the Biden administration has several very pertinent rules that are in the process of being finalized at both the SEC and the Department of Labor that relate to sustainable investing. Probably the biggest, most important one is climate risk disclosure to be required of all public companies. This is a very complex rule. The SEC is currently in the process of writing the final rule in which they have to take into account the range of public comments that they've gotten on that, and it'll be a while. And the right has signaled that they would be challenging it in court, probably using as the basis for it the Supreme Court's ruling on the Clean Power Act from last summer. The idea being that climate change in general is such a major question that administrative agencies shouldn't be able to regulate various aspects of it unless Congress has given a clear indication. And so Republicans really, that's going to happen anyway. I think what we would see in a Republican Congress, either house controlled by Republicans, is a lot of using their subpoena power to, to hold hearings and bring people in like Gary Gensler, the head of the SEC. Maybe we'll see asset managers, CEOs of asset managers being brought in to defend their recent focus on ESG and how they use it and how it affects their investments. That would be the main thing. I don't know, on other kinds of issues, it seems unlikely that, because, as you said, President Biden's got the veto pen, that would be difficult for them to actually press legislation at the federal level.
Just sticking further on the topic of climate, and COP climate summit in Egypt will be kicking off at the same time as the election. So, Biden's entire climate agenda, what are we thinking about that?
Well, I think the climate agenda is also something that is at risk if there is Republican control of either house of Congress. They're just not going to be able to pass anything. I feel like the right has been increasingly resistant to really any kind of significant climate change policy, regulation, whatever you want to call it. They've, I think, used the war in Ukraine this year and the consequent increases in the cost of gas to kind of try to make the case that somehow we shouldn't do anything about climate change and we should double down on fossil fuels. And so I think the climate agenda is in some danger if Republicans were to take control of either house.
And a little bit about some other policies of particular interest to impact investors. SEC is considering rules around climate risk disclosure, also naming rules for funds that call themselves ESG or sustainable. Mm-hmm. Are those also, essentially on the chopping block, at risk?
It's a little hard for me to understand why Republicans would oppose the naming rule or the disclosure rule. I think it's a matter of asking for greater transparency around funds that use these kinds of terms in their names, including impact, I think, and then to disclose, how they are seeking to both deliver competitive investment returns and positive outcomes for people and planet. I don't know that there would be a lot of I don't know why there would be a lot of opposition to that from the Republican side of the aisle. But the SEC can proceed with that rule. They can be put in place, and there's really nothing a Republican Congress could do about it without a Republican president. So all those issues would be potentially revisited in 2024 or thereafter. Or after the 2024 election, should Republicans also take the White House.
But what about broader economic and market considerations? Notwithstanding inflation, and the economy had been doing pretty good if you think about jobs, unemployment, and demand. And now the Fed seems to be bent on driving up rates and bringing on a recession. So what happens to impact and ESG investing in that potential downturn?
Well, in public markets investing, ESG and impact investors are not immune from broader market forces, and so higher a recessionary environment, is going to hurt stocks in a lot of sort of cyclical areas, and we're going to, we'll just have to, I think, weather that. it's been so long since there's been significant inflation that, the only sort of policy solution, so to speak, to it, I think that we've had in our back pockets for a lot of years has been for the federal to just rely on the Fed, to raise interest rates. And so, I think it's concerning. I don't think it's a foregone conclusion that the Fed will dip the economy into a serious recession, but I am concerned that were that to happen, that it would hurt Democrats even more going into the 2024 election, because at some really basic level, voters tend to blame whichever party is in the White House for economic problems, whether they've done anything about it themselves, whether they were truly responsible for it themselves. And let's face it, inflation was caused by just the disruption of the economy due to COVID, an unprecedented event, plus Putin's invasion of Ukraine, and it's quite a lot higher in most other places in the world than it is in the U.S. But nonetheless, the Democrats and Joe Biden are likely to get blamed for it, and you put a recession on top of that, even if it tames inflation, and it's going to be difficult. So I think we have to all hope for the best in terms of the Fed's policies, both taming inflation and not tipping the economy into a serious recession.
Do we have any reason to hope, given that the far right was pushed back in other countries' elections very recently? Can we take that as anything to signal what might happen here?
Well, I think what happens with authoritarianism is that there's a lot of folks kind of sitting there thinking, well, politics has just become so polarized. I'd just like for all that stuff to kind of go away. And that never works. And so I'm a little concerned that we've got that kind of dynamic set up here in the midterms, that maybe not enough people are recognizing the threat, and that could result in a very, I think, negative result. But it's still a few days out, and people can still get to the polls and make this decision. It's a hugely important election, and I agree with President Biden when he says democracy itself is at stake. So we'll see soon enough.
And maybe the kids will save us this time. Well, thanks for coming on the show, Jon. It's been a delight to have you.
Oh, thanks for having me, for sure. Thanks, Monique.
And that's going to do it for this week's Impact Briefing. Thanks to Jon and our producer, Isaac Silk. Ready to try Impact Alpha? Sign up for Impact Alpha Open, free of charge, directly at impactalpha.com. Want to go deeper? Grab a subscription and get full access to the site, Agents of Impact calls, and the daily email brief. Just go to impactalpha.com/subscribe and choose an annual subscription. Thank you for listening. I'm Monique Aiken, Managing Director for TIP, the Investment Integration Project. Make sure to check back for next week's briefing, and until then, take care.